All right, today we have a really special guest, Farhan. Man, I've been following you since I was 19 years old when I was just a spring chicken at Rutgers. I've been getting your emails about turnkey, off market deals, and just a tremendous success that you and your brother Shomail have had over the last few decades, man. Congratulations on all your success, and thank you so much for taking the time to come on the podcast today.
Thank you, David. Thank you for reminding me how old I am.
Oh, man. Farhan, I'll tell you what, brother, when we were talking in the conference room and you were telling me, man, I only have a couple years left in me.
Yeah.
I'm a father of three. I really want to spend time with my kids and not so much time working. I was just like, that's what entrepreneurship's all about, right?
Absolutely.
Not having to work the crazy hours. It's having the choice to say, you know what? I'm going to spend time with my kids. I'm going to spend time with my family and do the things that really matter. So, again, congrats on that, man. I'm happy you made a conscious decision to do it.
Appreciate that. Thank you so much.
And if the wife is listening, Farhan is a good man. He is a good man. All right, so really cool stuff with Farhan. I mean, he's got a splendid track record of real estate, brokering, fix and flips. I mean, this guy has literally flipped an entire town at one point. He's done over 1,000 deals. So, I mean, without going too much into the nitty gritty of me giving an intro, Farhan, can you just give a little background on yourself so the audience knows who you are?
Yeah, absolutely. So I graduated from Rutgers, and I started off full-time as a licensed realtor. And, you know, back then there wasn't really much videos on YouTube. There wasn't a lot of, there was no Instagram. Facebook was just getting off the ground. So there wasn't a way for me to self-educate myself. There wasn't mentors that were doing this. But I had watched some TV shows about rehabbing and flipping and stuff. And I thought the best way to get into the industry was to actually get licensed as a realtor. So now and David, we're both kids of Asian parents. So you could imagine that conversation with my parents that, hey, I got my degree, but I'm going to do something that you don't even need a high school diploma to do. I'm going to be a licensed agent. So, you know, I was foregoing some of the offers I had at Deloitte, at Johnson & Johnson, and, you know, some of these other companies. And so that wasn't an easy transition to get them to kind of work with me and agree to allow me to do what I wanted to do. So what I ended up doing was I graduated 6 months early to just kind of split test to see where it goes. And, you know, thank God since then, since I was 19, I haven't looked back. Oh. But I started off as a licensed agent, and I still have my license to this day. And the first year, I think I brought in about like 100,000 or so. And, you know, this is going back 2004, 2005 time. So, you know, it was decent money, and, you know, that money went a lot further back then. But that was enough for me to get started in buying, fixing, and selling. So I did my first flip that, you know, we got off of a billboard ad, spent a little bit of money on billboard, and that actually worked for me. And then there was also a development, actually not too far from Rutgers, the Hampton Club, where one of the buildings had burnt down, and I saw that they were reconstructing that building, and I saw that the units there were going for about $80,000 more than the current units. And these units had one more bathroom, and they were a little bit bigger. But what I started to do was I started marketing heavily while that new building was being built, and I ended up picking 3 condos there. And sure enough, once that building was built and those deals closed, instant equity.
Wow.
So once I was able to sell that, I was able to successfully transition my real estate business, which I just started referring everything out, and start focusing on buying, fixing, and flipping. Did that for, man, I've been in this game for a long time. So you're talking about 20 years worth of time. So I did that for a few years, and then everything tanked, you know, in 2008, 2009, the market completely shifted. And most of the deals were short sales, right? They had no equity. And so we started building up a business where we would process and negotiate short sales. So the way that we got into our strategy of rehabbing and fixing and flipping was we had to first short sale the deal to be able to create equity in something where there was no equity. And, we did that for, I would say, a good 3 or 4 years. Transition then back into just rehabbing when there was equity in the deals again. And then somewhere at the end of 2016, that's when my brother and I decided to partner up and go into business together because we were running parallel companies all the way up until this time. Wow. And so when we did that, there was an enormous at that time the prices were just right, especially in this one town that we had identified, Willingboro. So it was the same exact town that was next to Rutgers, Somerset, right off of Easton Avenue. It's Somerset, New Jersey, which is in Somerset County. At that time, the houses were going for like $300,000 to $400,000. That same developer, Levitt, built the same exact town in Burlington County called Willingboro. And when we went down there, it's like we're pitching ourselves. I was like, are we in our, are we right next to Rutgers and in our neck of the woods? Because the town looked exactly the same. The houses were the same. The models were the same, but they were not $300,000 to $400,000. They were $60,000 to $100,000 there, and it looked like it looked like the American dream. They had sidewalks on both sides, well manicured lawns, but it's just the school system there was ranking at like I think 1 out of 10, but it was a great rental market, right? And so we knew that we didn't want to go wide, and we wanted to focus in on one area, one town, and to do that, you needed to find things. You needed to find a rental town, number one. Number two, you needed to find a town where you could have one buyer buy multiple properties, right? So in a rental town, you're going to have an investor, and he's going to want to buy more than one property there. And we needed an area where on a cash purchase, somebody could buy it, fix it up, and rent it out and get about a 8 to 10% return on their entire cash purchase. All of those things kind of check the box. And I think out of the 450 or so distressed properties, we bought and sold over 120 of them. So about 25% of what that town had to offer as far as motivated sellers and distressed properties, we controlled and really dive down into that market. So much so that like we're running comps on the property, and 3 of those comps are our own sold properties, right? So we really started dominating. And one of the things that we were talking about in the conference room was that we have this limitation where I don't want to call it a limitation, but it's something that we abide by in our religion. We cannot earn money on interest, and we cannot pay interest. So what we did was we were basically selling rental properties. So we would work with high net worth individuals, find these properties in Willingboro, New Jersey, at that time that were trading for about 60 to 90,000, and each one of them, on average, would need $30,000 to $50,000 in renovations. But they are it's like renovating an apartment building, right? Even though it's not one structure, they're all one of 5 or 6 models. So we knew what kind of deal we were getting in. It was the same SKUs, the same type of renovation. And at that time, we had 3 project managers. And I think we had like 2 GCs that we were working with. So at one point, at like the peak of this, we were running about 50 to 55 rehabs at a time, splitting them up, though, between 3 project managers and 2 general contractors, right? The general contractors were not in-house, so we would pay a little bit more for that. But and the way that we were selling these properties was we were doing a lot of marketing. And, most of the credit of this goes to Shamel. He's got a very deep network. We were looking for specifically people that had specialized careers. So doctors, and especially those that specialize in some sort of practice, and then a lot of IT reps, attorneys, business owners, etc. The goal was for them to stop investing in stocks or businesses that were not tangible or they really didn't know a lot about. So the first stage was to educate them, to tell them why real estate is such a great investment. Appreciation, you're able to refinance tax free, depreciation, and cash flow. Right, those are some of the big points that we brought to them, and we kind of offered a one-stop solution for them. Like, we will source the properties, so we would buy them and then sell it to them. A lot of these we would give them contacts for contractors, but a lot of them would use us to do the construction for them. And then we had an arrangement with a company at that time, Slate House, that would on the back end property manage it. They would list the properties for rent and manage the tenants for them. So it was kind of like a one-stop shop to kind of build your portfolio in-house, focusing on this town. And so a lot of marketing went into that town. I mean, we were at the sheriff's sale buying 2 to 3 properties a week at the auction there, and then just buying them, closing on them, and then turning around and then selling them, doing the construction. And then once it's ready, out the door, it went to the property management company, and then they would put it up for lease, go through the go through all of the tenant applications, and then finally rent them out. And that was just, that was a massive way of wholesaling, because you're basically taking a product, injecting a forced appreciation by doing the construction, getting the cash flow to where it needs, and then you're basically wholesaling a ready to go product to a retail buyer.
Wow, you were probably one of the first turnkey providers in the marketplace.
Yeah. And to a point, and we did use that word turnkey, but we learned to call them rental properties, right? Because rarely anything in life is turnkey, right? You're gonna place a tenant, they're gonna have some issues, the property's gonna need some work, and that became an important component, just educating our investors, who would then eventually become sophisticated investors as they started to build their portfolio, that this is a long game, right? It's gonna take years for the appreciation. But now, the properties that they were all in for 120, they're worth like 300, 350. And, I think that vision and that education is so important in the beginning, that, cause I really try to stay away from that word turnkey, because there's so many things when you're managing, a property that can go wrong, right? You're hardly ever going to do that. Right. And, property management companies, it's hard to find somebody that's A+. Like we thought it was impossible, right? At best, C+. So we let them know that it's not turnkey, it's not passive. You have to manage the property manager, right? Because they're gonna have only so much incentive in managing your property. They're gonna have so many other things, right? You gotta look at what's happening. You gotta ask the questions, and you have to have a general idea of what things cost to repair, right? Just so to make sure that you're getting the highest ROI, right? That your portfolio is being taken care of.
Gotcha. Out of curiosity, how long was that period of time in which you were operating out of Willingboro?
So we were doing that between 2016 all the way up till about 2020, right before COVID hit.
Got it. Wow.
And I think, once COVID hit, 2 reasons, right? I obviously COVID changed a lot of things, but also the prices were starting to appreciate where the numbers on cash flow did not make sense.
Understood. And on average, what would you say you made per deal, all in?
So when we were wholesaling them, we were about $25,000 to $30,000 per
fantastic.
property. Yeah,
it's fantastic. So that was around a 4-year journey where you were hyper focused on one town.
Correct.
Were you
town and some of the surrounding towns, because the numbers still made sense in those towns in Burlington County.
The trend I find with you is that you are hyper focused, right? You went and got your real estate license. You did that successfully for a year. You got your cash and you started focus. You stopped doing the residential brokering, and you got focused on the investment side. And then when you found a gold mine opportunity in one town, you went hyper focused in that one town. I guess first off, I think that is the number one key to success, especially for people who are not Elon Musk, right? Like if you could get away with that kind of brain, fine. But for the majority of people, if you want to have any level of success, you have to put in the time mastering just one craft at a time. So thank you for sharing that, Farhan. I guess what would you have done differently now that you know what you know? Is there anything you would have done differently when you were flipping that town?
Well, a lot. So I think to be fair, there's no way to know back then what I know now, right? Because so much time has elapsed, and so so it's important, right? If there's I guess younger viewers out there, it's important not to live with regrets. Your regrets are just learning lessons. It's very important to channel that energy in what you're going to do now. The past is gone. Can't do anything about it. It's just the present and the future, right? So, man, the properties that I flipped that I shouldn't have flipped, right? How many things should I have held? I mean, when we were doing short sales, right, I was getting 2 families in Cliffside Park for like 120, 140,000. They're worth 800-900 now, right? So what should I have done differently? I should have held more, right? That's the real game in real estate, right? And we were talking about family and, what entrepreneurialism provides for you, which is being able to have that freedom, right? How do you get that freedom? You got to first know what your expenses are, both on the business side and on the household side, right? And it's just making comfortably enough money, more than that, to be able to support whatever you want to do and however you want to live. And the fastest and the easiest way to get to that is by holding properties, right? Because if you got a wholesale business, a signing, it's a constant market, data, and it's just a lot of transactions. And don't get me wrong, business is a great way to, if you're selling t-shirts or whatever you're doing, if that business is systematic and operationally functioning very well, you're going to make that money passively, right? But with real estate, it's who's really doing all that work, right? It's the tenant, right? They're waking up in the morning. They're going to work. They're doing all of that stuff, right? To do what? 30 to 40% of their income is paying your rent, right? And it's like as you build your portfolio, you can kind of rest easy that, hey, this is going to cover a lot of what I need to do. So if I still want to build a business, I don't need to take so much away from it. I can keep pouring back into it because the portfolio or the number of properties that I have is kind of feeding me for now. So I don't need the business to feed me.
Yeah,
So to answer your question, we would have held a lot more, right? So instead of selling those things that we were selling, maybe not bring buyers into the fold. So instead of bringing buyers in, we would have maybe brought them in as lenders, held on to it, and maybe do a hybrid where we take an acquisition fee up front to run the operations and to be able to pay ourselves up front while we're in it for the long game, right?
Right.
And so we don't regret that. We learned from it and we pivot, and that's what we do now, right? There's a huge emphasis on us, building the number of units that we own.
Yeah, so that's great you say that, man. We just spent 3 hours, like no joke, just in a conference room talking about data, about operations, about
fun stuff, right?
Yeah, right? Invigorating. I know. So like about how to get better, like how to squeeze out an extra 10%, 20% on our marketing spend, right? But the fact of the matter is that it is a hamster wheel, right? Yeah. Like you are constantly having to evolve, come up with new acquisition strategies or exit strategies. You're going to have to find a new way to sell deals, right? And the landscape, the legal and just the real estate landscape in general is just constantly changing.
Right.
So if you're not adapting, you're going to die.
Correct.
So either you as the operator have someone in your company that is just a complete rock star, A+++ player that cares about the company as much as you do, very hard to find. Or as the operator, you need to be constantly evolving, joining mastermind groups, learning, right? And quite frankly, dude, we live in New Jersey, and I didn't meet you until we went to, I think Arizona or something like that, right?
Yeah, we met, I think we met in California or Florida, one of those states.
Right. So, like, it's a constant moving target, and I'm glad that you said that, hey, look, I wish I held on to more assets. I wished I took some of the cash, and instead of pocketing that money, you don't seem like the Rolly, BMW, crazy kind of guy, but instead of spending that money elsewhere, maybe deferring that upfront payment, and holding for the long term. I think that's really great advice for the listeners. What are you doing now? What are you doing now to kind of learn from the past and build towards the future?
So on the holding side, right? It in retrospect, you can have your cake and eat it too, because if you do the construction and then you cash out refi, you can get that money up front, tax free, and then still hold on to it and get the cash flow, right? And essentially that is what we're doing now, right? So on the buy and hold strategy, one of the things that we talked about was Islamic financing, right? So we can't earn money on interest and we can't pay interest, right? So I can't just go to a bank or get lines of credit, et cetera. We do get lines of credit, but it's always 0% interest with these credit cards, right? But that'll only buy you 12 to 18 months, and there's only so much credit line that you can get on multiple credit cards. So the structure that we have is we essentially get private money, and it's private lenders. But they are also of the same Islamic faith, and they're looking for an outlet to invest their money or to partner up on deals or to lend money to. And their issue, again, is we can't pay interest, but they also, because they're of the same faith, they can't earn money. So it's like, it's a happy medium. It's a match, right?
Right.
And so what we started doing is we started focusing on folks that are a little bit older, folks that have IRA money, et cetera, where they're not looking for a crazy high return on their money. They're looking for something simple, and they're looking for, they're looking for something that is recurring and very low risk, right? So that's what we target on the capital side and on the lending side. What we do is you can't have a lender-borrower relationship. So even though there's a lien that goes against the property for them to protect their interests, it's really based on the revenue, like a business, right? So we structure the deals where we don't have to pay anything until the property starts to perform. The payments come from rent. The thing now is, though, because the portfolio is large enough, we're able to pay them from the entire portfolio, even from day one when they join in. But we are basically pegging a 6 to 8% return on money. And it works essentially like an interest-only loan, right? So they're getting 6 to 8%, but it's coming from the rent, right? And in our agreements, there's ways where, and you have to have it this way to make it compliant with our faith, that because there has to be a level of uncertainty. If the rent doesn't come in, then we don't have to pay that month. Obviously, we have never done that because the portfolio is large enough to kind of, withstand any of those properties that are not performing.
I love that, man. I love how you because, bro, my company is called Leverage Companies for a reason.
Right.
Debt is a powerful, powerful tool. The world runs on debt.
Right.
Right. And just in the 3-hour time span that we spent together, you went to my office and prayed.
Right.
And I said, my gosh, this guy's awesome. He's abiding by the faith, right? And so, huge kudos to you, brother, on keeping your faith.
Appreciate that.
It's amazing to see. It's inspirational. And awesome that you figured out creative ways so that you could still operate in the real estate game without having to make crazy amounts of cash to operate.
There's only so much that you can buy with your own pocket, right? So you have to leverage, and it's, debt, construction, and I think management. Those are the 3 key things that you need in real estate to be successful.
Absolutely. Absolutely. Those are 3 pillars for sure. So for me, it's really simple, cookie cutter, right? I'll buy an asset. I'll try to buy it 50, 60 cents on the dollar. I'll turn around, renovate it, rent it out, get a new forced depreciated value, go to a lender, do a cash out refinance. I get that done over a 6, 9, 12-month period.
Right.
And I get all the money I put in, right? I pay off the first lender, and now I have long-term debt sitting on the property, and it's cash flowing. It's depreciation towards my active income because I'm a real estate professional. It's depreciation for my other gains throughout the rest of my portfolio, right?
Right.
And it's appreciating in value while I'm doing principal pay down. So it's a phenomenal. I mean, my returns, you just can't get it on the stock market or with any other private. My personal returns are just out of this world, right? I mean, how does that even look for you? Do you have a cash out play in mind? Like, what is the exit on on your assets?
So there are a few Islamic banks that offer just residential financing for folks that are looking to purchase a home. And the way that they structure it is they'll have a subsidiary LLC that'll go on the deed, and it becomes basically like a co-ownership, but it's pegged to the interest rate. We're in talks with some of those companies and also with community banks to do a refinance based on the terms that we need, so that we can cash out, the private equity that we have in our properties that's being financed, and then just recycle that for new acquisitions. And then on the back end. So it's just, to abide by the faith. It is a little bit more work. It's a little bit more hustling, but because we've been so persistent with it, eventually we're going to be able to successfully burr out of them and then take our private equity and then, find that next market or find that next set of deals that's coming in from our current business that we want to hold on to.
I will say this though, right? Like, you have been faithful and God has provided, right?
Yep.
Like, the fact of the matter is that I can't raise money nearly as good as you and your brother Shomail.
Yeah.
My capital is significantly more expensive than the capital that you're raising, and it's because you said, you know what, I'm gonna abide and I'm gonna trust that God's gonna provide. So, dude, love you, man. That's freaking awesome.
Appreciate that.
So now you've got the capital raising machine going, right? I see emails. You're doing education. You came to my office. You're dropping bombs on text message marketing, even though the rest of the world is like text message is dead, right? Yeah. You gave me strategy on data. I know that from our talks, you want to stay lean. You want to make a solid profit margin on your active income, on your wholesale biz, on your fix and flip stuff. But your real focus is AUM, units under management, and really building up a passive income vehicle, right? Where are you now, and where do you want to be in the next 5 years?
Where I'm now, I think I get pulled into the wholesale business a little bit too much. Mm-hmm. I want to be completely removed from that, and I want to focus on the value add hold plays, right? So more subject to deals on larger assets, more seller finance deals on larger assets, and build to rent. That's how you can quickly build up, the properties under ownership. And that's like, that is really where you're going to get the most benefit out of being in the real estate industry. And that's kind of what I want to focus on. Not so much the cash flow. I want that to be automated, but focus on the balance sheet.
I love that. Guys, if you're listening, I need you to hear him say those 3 strategies one more time. Can you go again?
Sure. So we want to focus on seller financing deals. Those are deals usually where the owners own the property outright. And essentially, you don't need a lender. The lender becomes, your seller becomes your lender. So you can structure that deal without going to a bank, without going and getting private equity, any of that stuff. And if you have a large enough asset and you have a seller that does not want to have a massive capital gains problem and they're willing to take the money over time, that's a great play there. And if they have, and if they want to leave a legacy and they want to leave that cash flow for either their grandkids or their kids, that's a great play to do, because a lot of those owners are afraid that if I pass on like $2 or $3 million to my kids or my grandkids, they're going to blow through that money. So that's a great play, subject to if somebody's got super cheap financing on a deal that they got, let's say, around the COVID time, you can basically take advantage of that and get that same rate on that financing. And then the other play is build to rent, right? You're basically getting raw land, and instead of selling the units off, you hold on to them 15, 20 years until the property needs improvements on the bigger ticket items like the roof, the HVAC, et cetera. But you basically create value, you create cash flow. You just have to do your numbers in advance to make sure that it makes sense. But, once that project is done, you can have another 20, 50 units, depending on what you build.
Absolutely. Farhan, what markets are you investing in now? And if people do have deals listening to their podcast, what kind of deals are you looking for that they could send you?
So we're primarily in Central and South Jersey. Our office is located in Kendall Park. And, right now we're looking for anything residential or anything commercial, right? In but we focus on residential. So we're not really doing much with commercial apartment building. Well, we are doing apartment buildings, but we're not doing offices, industrial, etc. So as long as it's residential, whether it's a single family, a 10 unit, a 15 unit, that's what we're looking for in that demographic and in that geographic.
Fantastic. So if you're listening and you have deals in Central, South Jersey, residential ideally, not office or retail. It could be apartment buildings, but it mostly a residential component.
Yep.
If you are of the Islamic faith and you are looking to place capital and you're having a hard time finding a safe place to find reoccurring, extremely safe revenue, Farhan Showmail, I'll put my golden stamp on it. You guys are good people. Thank you so much for coming on the podcast, Farhan. If the people want to reach you, what's the best way to get in touch?
Instagram, I think, is a good way. The REI Bros. You could reach both Shiva and I that way. We check our account, we check our DMs. It's the REI Bros. That's the Instagram handle.
Awesome. Thanks again, brother. Thank you
for
so
having
much.
me, David.